Switzerland is one of the world's wealthiest countries with a GDP per capita that outstrips that of other major economies like the US, Japan, and Germany. It is also home to some of the richest citizens in the world, with a mean wealth of $696,604 per adult, at a steep cost of living to match. The Swiss cities of Zurich and Geneva held steady among the world's 10 most expensive cities last year, according to the Economist Intelligence Unit, even as inflation pushed up living costs in other pricey places, such as Singapore and New York. In 2018, the Swiss economy grew 2.5%. For 2019, the Federal Expert Group for Economic Forecast expects it to expand by 1.5%. Switzerland's gross domestic product, GDP, has been increasing by between 1 and 3% yearly for nearly a decade. Turmoil in the European Union, the trade war between the United States and China, as well as a strong Swiss franc, do not seem to stop the prosperity of the country's economy. What is its formula for success, and will it last? Switzerland is commonly associated with its banks and watches. Facts, however, tell a different story. Only about 9% of Swiss GDP is traceable to financial services. Manufacturing makes up around 18%, retail almost 15%. The most significant part of GDP, some 31%, is generated in other services. While it is also true that every year more than 25 million watches and clocks are produced in Switzerland, they only account for 9% of Swiss exports. Chemical and pharmaceutical products make up more than 44% of the country's total exports, machinery and electronics over 14%. By the way, Switzerland manufactures and exports twice as much coffee and tobacco-based products than chocolate and cheese-based ones. These statistics might seem anecdotal, but the story behind them elucidates an important, perhaps even the most critical, facet of the Swiss economy: its diversity. The world's 20th largest economy, with a nominal GDP of $679 billion, 2018, according to the World Economic Forum, is a mix of manufacturing and services, of high-tech and low-tech, domestically oriented businesses and globalized agents. The Swiss economy is dominated by small and medium-sized firms, which constitute more than 99% of the total number of its enterprises. Two examples illustrate the system. As Uber entered the Swiss market in the city of Zurich, some of the incumbent taxi operators teamed up to develop their own app, which was inspired by Uber but fitted to the Swiss market. For example, through the integration of the train schedule, with the entrance of Uber and the response by traditional taxis, the overall market has grown in terms of revenue. In the Swiss canton state of Zug, developers of distributed ledger technology, DLT, are thriving. While most of their products are yet to achieve scale, the companies are developing new applications at a record high pace. As a result, Swiss citizens are generally less impacted by price rises, as they tend to spend a lower proportion of their income on essentials such as food and accommodation, versus on discretionary items. Another reason for Switzerland's relative price stability stems from the strong Swiss franc. The country's currency has steadily strengthened, rising in value to reach parity against the euro in 2022. While many currencies plunged against an appreciating US dollar, the Swiss franc held steady amid volatility in Europe. That's largely due to its status as a safe haven currency or defensive asset. The Swiss franc is heavily backed by a large reserve of gold, bonds, and financial assets, which help the Swiss National Bank ensure the currency's stability during times of volatility. That also benefits Switzerland, an economy heavily dependent on international trade. Switzerland imports around $302 billion worth of goods and services each year, the majority of which come from neighboring EU countries. A stronger Swiss franc provides an effective discount on those imports. Switzerland, meanwhile, exports a near equal $305 billion annually, largely comprising higher value goods and services, such as watches and pharmaceuticals, which are less susceptible to price fluctuations than our low-margin, mass-produced commodities. Switzerland is also less exposed to some of the external factors that pushed prices higher in 2022, such as Russia's war in Ukraine. Home to a mountainous topography and more than 1,500 lakes, Switzerland is less reliant on oil and gas imports than some of its European neighbors, with hydroelectricity playing an important role in its energy supply. Swiss energy suppliers are also largely publicly owned, meaning that they are less exposed to extreme market volatility through financial safety nets while being subject to stricter pricing regulation. At the end of 2022, energy prices in Switzerland rose at a rate of 16.2%, below the levels faced by major peers like Germany, 25%, the Netherlands, 30%, the UK, 52.3%, and Italy, 64.7%. The country's energy regulator now expects prices to rise by a further 27% in 2023, with the average household energy bill topping 1,215 Swiss francs, $1,238. Jean-Claude Huber, manager of Hotel Pays Buen Closters in the east of Switzerland, said that the standardization of long-term energy contracts has helped shelter businesses like his from any major price rises this year. Alongside energy, Switzerland also has stringent controls on the price of goods and services, which also makes them less susceptible to inflation-led fluctuations. Of the core products used to measure inflation in the Eurozone, including food, housing, and transport, almost one-third, 30%, are subject to price regulation in Switzerland, more than in any other European country. Swiss food prices rose at an annualized rate of 4% in December last year, compared with 11.9% in the US, 16.9% in the UK, and 19.8% in Germany. High tariffs on certain agricultural imports also mean that domestically produced foods, such as milk and cheese, are preferentially priced and less impacted by movements in global food markets. That in turn has helped stimulate the country's economy. That doesn't mean that Swiss consumers have been totally immune to recent price hikes. Locals who spoke to CNBC noted a relative rise in the price of rental accommodation, as well as in that of some food products. However, the Swiss National Bank said in December that it sees inflation falling to an average of 2.4% in 2023 before reaching 1.8% in 2024. That would come in under the bank's 2% target. Still, economists said that is unlikely to hurt the economy. Nothing seems to stop the prosperity of the Swiss economy. The country's highly diverse economy and its unique political system together form an ecosystem that is amazingly productive and resilient. The question, however, is how long the Swiss can manage to shield their order from the globalized world's homogenizing pressure. Allowing the bankruptcy of troubled lender Credit Suisse would have crippled Switzerland's economy and financial center and likely resulted in deposit runs at other banks, Swiss regulator FINMA said Wednesday. The Swiss Financial Market Supervisory Authority and the Swiss Central Bank brokered UBS takeover for embattled Zurich rival Credit Suisse for 3 billion Swiss francs, $3.3 billion, in a deal announced on March 19. As part of the transaction, the regulator instructed Credit Suisse to write down 16 billion Swiss francs worth of AT1 bonds, widely regarded as higher-risk investments, to zero, while entitling equity shareholders to payouts at the stock's takeover value. Domestically, Switzerland's federal prosecutor has now opened an investigation into the takeover, looking into potential breaches of the country's criminal law by government officials, regulators, and executives at the two banks, according to Reuters. Several bondholders are studying legal action over the AT1 write-down. As of 2023, the Swiss economy remains one of the strongest and most stable in the world. Despite global economic uncertainties, Switzerland's economy has been able to maintain steady growth, low unemployment rates, and a high standard of living for its citizens. Thank you for watching, and don't forget to subscribe for more thought-provoking content. We will meet you soon in a new video. Until then, stay happy and take care of yourself.